Hello and welcome to yet another video on IND AS. So today we are here to present on IND AS 20, which is government grants. The key topics that we are going to cover today are the objective and the scope, key definitions. We'll talk about what is the government grant, what is the recognition criteria, and the classification of government grants. We'll talk about grants related to assets and grants related to income. We'll spend some time to understand how the treatment is being done when we receive some compensation of the expenses and losses. We'll talk about the concept of non-monetary government grants. We'll also look at how the repayment of the government grant happens, which is largely the refund of the government grants. We'll talk about the government assistance, presentation in financial statement, disclosure, and finally we'll spend some time in understanding the key differences between IND AS 20 versus IES. So we'll move to the next slide then. Okay, so we'll quickly talk about the objective and scope of this IND AS 20. So when we talk about the objective is to prescribe the accounting treatment of the government grants and disclosure of the government assistance. So these are the two key topics that are going to get covered in this IND AS. When we talk about the government grants, the core principle of government grants are recognized only when there is a reasonable assurance that the entity will comply with the condition and then that the grant will be received. So these are the two primary conditions that needs to be uh, adhered to or needs to be complied with so that we could able to do the accounting for the government grants. And when we talk about the scope here, so government grants related to the assets and the incomes are covered here. So we'll talk about both these type of government grant in detail in the upcoming slides. It also talk about the government assistance, which is the non-monetary, and this is what that needs to be disclosed as a part of the objective as well. Excluded grants are the related to the income tax, IND AS 12, government participation in the ownership, benefit available generally, example tax credits. So these are like exclusions from the government grants. And if we try to compare it with the equivalent international accounting standard, so IAS 20 is the international accounting standard, which is equivalent to the IND AS 12, and the objective and scope of IND AS 20 is aligned with IAS 20. So we'll move to the next slide. Okay, so we'll spend some time in understanding some of the key definition. So when we're talking about the definition of government here, so government refers to the government, government agency, and similar bodies, whether local, national, or the international. So typically, any kind of agency which is directly related to the government, whether at the central level or whether at the state level, is termed as the government here. So government assistance is the action by the government designed to provide an economic benefit specific to the entity or range of the entity qualifies under the certain criteria. So typically, government assistance are non-monetary, which is being provided by the government, and these are like do not trigger any accounting event. It is just the disclosure that we need to make. So government assistance for the purpose of this standard does not include the benefit provided indirectly or through any affecting general trading condition, such as the provision of the infrastructure development area and the imposition of the trading constraints or the competitors. When we're talking about the government grants, these are assisted by the government in the form of the transfer of the resources to an entity in the return of the past or the future compliance with certain conditions. So government grant is specifically given to that particular entity on complying with certain conditions or basis the past performance which the entity has already delivered. For example, if entity has already delivered some, let's say export, so government will provide some incentive in form of the export or provide some assistance or provide some grants in form of the some kind of extra monetary benefit to the organization, and whether that extra monetary benefit the grant would be in the form of an asset or whether it would form of an income, that would be something that we're going to discuss. But typically when we talk about the grants here, this is the kind of the monetary benefit that is being provided to an entity, and it is not general or generic as we spoke about in the government assistance. So government assistance is largely a non-monetary benefit, but government grants are the monetary benefit that is being provided by the government to comply with this is the certain conditions that has been fulfilled by the organization in the past, and the grant has been given to comply with certain conditions. So what are those conditions? We'll talk about the type of the grant, and then we'll talk about those conditions as well. So when we talk about the grant related to assets, the government grant, those primary condition is that entity qualifying is to them should purchase the construct or otherwise acquiring the long-term asset. Subsidiary conditions may also be attached restricting the type of the location, which means that when government provide any grant for which an asset needs to be purchased. The government prescribe the condition that needs to be complied with, so that whenever entity has given that has been given that kind of grant, the entity should utilize that grant in the manner and the fashion in which it has been prescribed by the government. Government related to the incomes are the government which is other than those related to the asset. Forgivable loans are the loans which the lender undertakes to waive repayment of such a certain conditions. So basically, these kind of loans are some when government try to waive certain kind of loans, basis a certain condition that needs to be you know complied with by the entity. So those are like some of the specific cases wherein loan has been forgiven by the government. Likewise, the fair value is the price that would be received into sell an asset paid or transfer to the fair transaction between the market participation and the measurable. So typical definition of the fair market value. And when we try to look at these definition and compare it with the IAS 20, see the definitions which is being prescribed here, whether it is the government assistant, government grant related to asset, grant related to income are largely the same, and there is no deviation. So we'll move to the next slide then. Okay. Let's talk about the government grant recognition criteria and classification. So when we talk about the government grants, so government grants are assistance by the government in the form of the transfer of the resources to an entity in return of the past or the future compliance with conditions. So what are those conditions? So typically, both of those conditions depend upon the case to case basis, and it depends upon the type of the grant which government is granting, and that grant can be given to any kind of industry, any kind of entity. So that is subject to the multiple conditions. For example, any grant is being given in textile industry, so that entity must have done some past performance in terms of making some major contribution for the textile industries, and hence that industry is getting the grant from the government. So all those conditions are subject to a type of the industry in which those kind of benefits are given to the entity. And grants includes what? It includes the cash grants, which is a direct benefit in terms of the cash benefit, asset grant, which means like land or machinery, subsidized loan, a forgivable loan, and a loan from a government is treated as a government grant when there is a reasonable assurance that the entity will be the term of the so as we spoke about in the last slide, that any kind of the loan which is forgiven is also treated as the kind of the benefit which is being coming from the government. Does not include general market incentives and the tax deductions, because these are like normal government assistance that is being provided and is not treated as the government grant. So one point which is being mentioned here is subsidiary low C interest version 1 for interest benefit. So any kind of interest benefit which is being accrued to the organization will be treated as per the IND AS 109. Recognition criteria: government grant is recognized only when there is a reasonable assurance that the condition will be complied with and grant will be received. So if these two conditions are met, then only we have to recognize the government grant in our books of account. So receipt of the cash alone is not sufficient. Government approves a subsidy subject to installation of machinery. So recognition will only happen once that machinery is installed. So which means that there is an event that needs to be complied with to do the accounting for that particular government grant, because government grant is being normally allowed to fulfill certain conditions. So we'll move to the next slide and see few of more understanding on the recognition criteria and the classification. Okay. So as we speak, so what we are saying then, in terms of the government grants shall be recognized in profit and loss on a systematic basis over the period in which entity recognizes as expense the related cost for which the grant has been intended to compensate. So which means that it has to be recognized over the period of years for which the grant has been provided by the government, and it will depend upon how the treatment is going to happen if we are receiving the grant for an asset or grant for an income. So treatment is a bit different. So we'll talk about that in the upcoming slide. Classification of the government grant. So we have looked at it. The grant related to an asset are the grant whose primary condition is that the entity should purchase, construct, or otherwise require a long-term asset. And grant related to income is the grant intended to compensate expense or the losses or give an immediate financial support. So if immediate financial support is given in form of some incentives, it is being treated as a grant related to income. But if the grant is being given to construct an asset, which requires some time and which requires some conditions to be fulfilled, that is largely rated as the grant related to assets. We'll talk about both this in details. We'll talk about the recognition criteria and we'll talk about the accounting treatment for both these cases. We'll move to the next. Okay, so we'll talk about the grant related to assets. Okay, so grant whose primary condition is that entity should purchase, construct, or otherwise acquire long-term asset. So this is a condition which is being tagged to any grant which is being given to any entity for creation of an asset. So accounting treatment in DAS is that we have to do the accounting, it is mandatory and recognized as a deferred income and credited to the P&L systematically over the useful life of an asset. Deduction from the asset cost is not allowed. So this is a very important point. So which means that there is no deduction which is being allowed from the asset cost. It is only deferred income that needs to be shown. This is a principal difference between the IAS 20 because under IAS 20 deferred income method deduction from the asset it allows that entity can adopt either of these methods, which is deferred income method or deduction from the asset. But Ind AS only allows the deferred income method. So this is one of the fundamental difference between the Ind AS 20 versus IAS 20. So typical example as we talk about the Ind AS 20 is that let's say there is a machinery cost of 10 lakh rupees. Government grant is received for 2 lakh rupees and useful life of the asset is 10 years. So accounting would be we have to defer grant and credit the P&L annually on the basis of the life of the asset, which is 20,000. So 2 lakh divided by 10 is equal to 20,000. So we have to do a first entry that we have to do is we have to debit the bank, credit the deferred grant, and then at every year we have to debit the deferred grant and credit the P&L basis the life of the asset. But IND AS 20 only permits deferred income method when we are talking about the grants which is related to an asset. But this is a fundamental difference between the IAS because IAS gives an option here. So we'll move to the next slide. Okay, so we already spoke about this, that what we have to do on the receipt of the grant, we have to debit the bank account and then we have to credit the deferred government grant. And then on every year, we have to debit the government grant, deferred the government grant and credit the P&L, which is our other income. So we'll move to the next slide. I will quickly talk about the accounting treatment for grant related to income. So what we are saying here, so grant intended to compensate the expense or losses or given immediate financial support recognized in the P&L over the period in which the related cost is incurred. It has to be shown as the other income or deduction from the related expense. So here there is a choice that is being given that we can either show it as other income or we can show it as deduction from the expense against which we have got that compensation. But in grants related to asset, there is no choice. We have to only account for as a deferred income method. For example, like salary subsidy is 5 lakh for a year. So we can debit the bank and credit the other income. And in the financials, we can set it off against the salary or we can simply show as other income in the financial as well. So we'll move to the next slide then. Okay. So quick understanding on when we receive some compensation on account of some expenses or some losses that has been incurred by an entity and that has been compensated by the government. So quickly we'll just quickly have a look at that. So what we have to do, we have to recognize immediately in the P&L when receivable and there is no deferral. Example, flood loss compensated by government to the tune of 1 lakh. So we'll simply say that bank to the other income. So there is no deferral. It has to be recognized in the same period in which it has been received from the government. So we'll move to the next slide then. Okay, now we'll quickly have a look at cases wherein we have not received direct cash from the government, but we have received an asset or equivalent value of the land or building as a grant from the government. So cases like we have received a free land machinery given at a concessional rate or building allotted at the nil cost. So in that case, what we have to do, we have to record the asset at the fair value and then we have to do the accounting treatment accordingly. For example, if we have received the machine which has a fair value of 10 lakh, which we have received for free from the government. The useful life is 10 years and depreciation straight line. So what we have to do, we have to recognize an asset at the fair value as a part of my PPE. And in the subsequent year, we have to charge off that asset by debiting the PNL and crediting the asset, which is like accumulated depreciation and charge to the PNL would be on account of depreciation would be 1 lakh. And then likewise, we have to create a deferral income here by debiting the deferred grant and crediting the PNL. Because we have credited the deferred grant in the first year, then it has to be recognized on year-on-year basis over the life of the assets. So this is how we do a treatment of a particular asset when we receive that particular grant from the government, in not in form of the cash but in form of an asset. So move to the next slide then. Okay. So we'll quickly have a look at a scenario when government wants the refund of the grants that they have already given. This normally happen that when the entity could not able to comply with certain set of condition, this is which they have given the grant. So in which case the grant which they receive, they needs to be repaid back to the government. So again, it depends upon the kind of the grant that we have received. So if it is income grant which is related to the income, then what we have to do, we have to first apply the grant against the unamortized deferred credit, and then balance, if at all, needs to be treated in my P&L. So we'll talk about it in the with the example in the next slide. Likewise, if it is a repayment of the grant related to an asset, then we have to make sure that whatever grant which you have received, it has to be again adjusted to the deferred income, and we'll have a look at a clear example to understand the same. So the first example, which is the refund for the income-based grants, what we are saying, government grant received 1 lakh, purpose reimbursement of the employee training costs. Grant recognized in PNL over 2 years, which is 50,000 in year one and 50,000 in year two. Entity violates the grant condition, entire grant becomes refundable. So which means what has happened, when they have received the grant, they have debited the bank and they have credited the deferred income. In the year one, they have debited the deferred income and credited the income of 50,000, and in second year they have again debited the income, debited the deferred income and credited the income with 50,000, which means that entire deferred income has been exhausted and there is no balance in the deferred income. So what they have to do, if in this case refund has to be done, it has to be directly debited to my P&L, and it would be charged to my P&L directly, because there is no amount which is being left in the deferred income. Had there been an amount which is being left in the deferred income, then first my deferred income would have been debited, and then only we can charge to my P&L. But in this case, because there is no amount left in my deferred income, hence entire 1 lakh which is being paid to the government, which is paid back to the government, will be charged to my P&L. So my P&L will be debited with 1 lakh rupees. So we'll quickly go to next slide and see the example of refund of the grant which is being received for an asset. Okay, so this is, I think, the entry from the last slide. So what we are saying here is that because at the end of the year two, deferred income balance is zero because fully recognized. So hence we have to debit the PNL by 1 lakh and credit the bank or the government paper. So this we discussed in the last slide. Okay, now we'll come to the refund of the asset-based government grant. So machinery which cost 10 lakh, the government grant received of 2 lakh, useful life is 10 years, and then government grant treated as a deferred income. Annual grant amortization is 20,000 because 10 year is the life, so 20,000 per year would be treated as a deferred income, and after 3 years the grant conditions violated, so grant become refundable, so 2 lakh needs to be refunded. So position at the end of theory 3 would be what? So we have recognized 20,000 into 3, which is 60,000, has been recognized till for 3 years. Deferred income balance is 2 lakh minus 60,000, which is 1 lakh 40,000. So there are two entries that we need to do. So deferred income would be debited by 1,40,000 and bank would be credited by 1,40,000, and because we have already credited 60,000 in the earlier years, so what we have to do, we have to debit that into PNL and we have to credit that amount to the bank account. So this is how the treatment would happen for the grant which is received from the assets. So we are going to move to the next slide then. Okay, now we'll talk about the government assistance. So when we talk about government assistance, so excluded from the definition of the government grants, from certain form of the government assistance which cannot reasonably have a value placed upon them, and the transaction with the government which cannot be distinguished from the normal trading activity of an entity. So typically these are like normal assistance that is being provided by the government, which cannot have monetary benefit, which cannot be translated into monetary benefit directly, and these are largely being given to a set of the entities or a particular zone or particular set of the industry. So example like free technical advice which provided by the government, marketing support provided by the government to certain set of industry, and like some professional procurement again specific to certain kind of industry or certain area. So accounting is no recognition, and we need to disclose these facts to the notes of accounts. So we'll move to the next slide then. Okay, so how we have to make the presentation in the financial statement for the government grants. So we have to in the PNL that grant income is shown as other income or the reduction from the expense at the case may be, and balance sheet it is normally shown as deferred government grant, and it will be shown till the time the government grant is not being exhausted, depend upon the periodicity at which grant has been given, and in case of the asset, depend upon the life of the asset in which it has to be recouped. So this is how we present the government grant that is being received. So we'll move to the next slide. Okay, so we'll come to the disclosure part. So what we have to disclose is accounting policy for the grant. What is the policy of the that is being adopted by the entity? Nature and the extent of the grant, unfulfilled condition, if at all if there are any, and the contingency attached to the grant. So all these things needs to be disclosed separately in the notes to the accounts to make sure that we have correctly captured all the attributes for the government grant and recognize them correctly in our financial statements. So we'll move to the last slide of this presentation, which is the difference between the IND AS 20 and the IAS 20. Okay, so I think largely it is aligned with IAS 20. The only point of gap is that as in grant presentation, wherein IND AS specifically talk about deferred income only, but IAS talks about deferred income or asset reduction. So there's choice been given, but otherwise everything is being same with respect to the measurement, income grants, refund treatment, and the non-monetary grants. So this is the last slide. So we'll move to the final thank you slide then. Okay, so this is the final slide, which is thank you slide. So I would like to thank all my subscribers and viewers for watching this video till end. So my sincere request to please cascade this to as many people as you feel that they will get benefited from this presentation. All the aspirants who are appearing for their professional examination, this will be useful to them as well. And do let us know in the comment section for any feedback that you have. And with this, we come to the end of this session. We'll come with another IND AS as a part of IND AS series very soon. So till then, thank you and goodbye.